So this video is sponsored by Skillshare. More about them later. So earlier last week, I did a quick video talking about the alleged dilution of Alibaba shares from the Form F6EF disclosure. So I will leave the Seeking Alpha article dispelling this so-called dilution allegation in the description box down below. And if you want to watch the previous video, you can also search for this thumbnail. So in that video, there was also a prediction made by some analysts from Citibank where they floated the idea that, hey, Alibaba's SEC filing may actually signal SoftBank's plan to sell its entire stake. So SoftBank is currently Alibaba's largest shareholder, sitting at around 24.8% of the entire company, which is equivalent to around 673 million American depository shares. So in that recent filing, they actually requested for 1 billion American depository shares to be registered. To add fuel to the fire, this speculation was made even more believable because Citibank was essentially the facilitator and the depository as specified for this registration. So it inevitably gives off the impression that, hey, Citi might have actually access to certain inside information which led them to this conclusion. So to make things worse, in the article of suggesting that SoftBank might be or might not be unloading its Alibaba position, they actually used extremely vague words in the specific article like SoftBank Group may intend to sell some of its share, coupled with a few lines of suggestion such as SoftBank has been under pressure in recent months as the value of many portfolio companies has slid with the technological downturn. Or SoftBank has used buybacks in the past to bolster its own stock. So after reading everything in totality, the picture seems to come together much clearly, hinting that SoftBank is under pressure to sell or liquidate their investments or maybe to realize their profits in the Alibaba investment. So back in the previous video, I did reiterate the fact that I don't think SoftBank will be liquidating a huge chunk of their position, especially when Alibaba is trading at such a depressed and distressed level. If they really wanted to realize some, if not all of their gains, because they believe that there might be better opportunities elsewhere, they would have done it when Alibaba was trading at $300, not $120. Lol. Over the period of the crackdown, SoftBank did sell away small portions of their stake, but it's nowhere near of mass liquidation as speculated due to the 1 billion registration of ADS. So despite not having any confirmation from either parties, the stock revisited the $110 range again because of this impending uncertainty. So for other stocks, investors tend to buy the rumor and sell the news. The inverse is true for Alibaba. You sell the rumor and you buy the news. What exciting times to be alive. Coincidentally though, SoftBank's earnings call was the subsequent day after the article's publication. And upon close observation, there was little to no mention about their intention of liquidating sizable positions in Alibaba. However, SoftBank did comment that we are in pain over China's crackdown on its big tech industry and companies, which hit SoftBank's portfolio of investments, especially in some high-profile tech companies like Alibaba and Didi Global. So SoftBank's net asset value fell by 1.6 trillion yen, which is equivalent to about 14 billion US dollar, and that is a fall of 30% from the peak in September 2020 and the lowest level since 2017. So Mr. Sun actually blamed the sharp fall in Alibaba's price, and Alibaba actually once made up majority of SoftBank's net asset, but now accounts for less than a quarter of the total. So despite the horrendous performance thus far, it doesn't seem like SoftBank is faced by whatever is happening in China, about how everyone is worried about Chairman Xi's hard-handedness or even this so-called idea of political uncertainty, and you can't put a price tag on politics. So I guess people on the internet and the layman knows more than them. Oh well. That said though, SoftBank did say that they unloaded a small number of shares to settle contracts with its lenders, but their stake in Alibaba remained close to a quarter. So what does settling contracts mean? So it's probably some of their outstanding obligation, maybe in the forms of some form of leverage or options position that they took prior to this entire crackdown. So throughout the presentation, they never confirm nor deny the rumor of their intention to offload their entire Alibaba position. I would like to highlight the keyword here, their intention. But it does seem like the rumor was concocted by analysts trying to quote-unquote be smart and trying to front run and guess what the next moves are. That said though, even if SoftBank really has the intention to sell out their entire position, they probably wouldn't announce it beforehand because everyone else will be rushing for the exit. So even though I might not be the biggest fan of the spray and pray philosophy, I'm sure as seasoned capital allocators and venture capitalists, exiting at this kind of price levels will bring more attention onto them from their respective shareholders. So it's basically shooting themselves in the foot with a whole load of explanation to do later on to explain to them why they didn't sell at 300 and only sell at this kind of distressed pricing. So in this short chronicle, it shows how easily narratives can be built to tell a certain story by whoever has that ability. And it's as clear as day how people manipulate the stories and by extension, the stock price or even the markets by and large. So in order to prevent yourself from falling victim to such manipulation, you ought to continue learning and train your greatest asset, which is this £3 jelly here. So introducing today's sponsor, Skillshare. So Skillshare is actually an online learning community with thousands of online classes for all sorts of topics. They have a wide range of topics from personal finance, productivity, and even how to start your very own YouTube channel like I did. Like investing, I think the biggest asset in your life is not your stock portfolio or even your property, it's yourself. So like everyone else, when we are at home, we always have that inertia and procrastination usually kicks in not long after. So right now, I'm taking a class from Thomas Frank with regards to productivity and how to build habits that actually last. So as Skillshare is sponsoring this video, the first 1,000 people to use the link down in the description below will get a month of free trial of Skillshare Premium membership. So in this 1 month, you can actually explore the whole host of classes from photography to writing and even entrepreneurship. So I think that you will enjoy the platform as much as I did. So be the first 1,000 people to use the link below. So thank you Skillshare for sponsoring this video. So back to Citibank. Rather than outsourcing the responsibility and claiming that, Citibank is manipulating the market and they essentially played all its Alibaba investors, I think the more important lesson would be to think for yourself. Sure, you can blame Citi for spreading fake news or why did they allow their analysts to say such a thing, or even the media outlets that published and even distributed all these different articles. But these sort of speculations are here all year round, and it won't stop at Alibaba. The more critical lesson we can learn here, especially when you're investing in these sorts of quote-unquote distressed securities, where the narrative is exceptionally disadvantageous to the company, like Chinese equities, Facebook, Intel, and even some of the growth stocks that are down 70% from its all-time high in this current market. I would personally qualify them as borderline quote-unquote distressed because everybody is running away. You need to be even more careful when consuming content or even news articles relating to them, and my content included. So is the author trying to feed more fuel to the fire? Is this content creator painting a ridiculous picture? Or are there really merits to the discussion that is pertinent to the underlying business or to the underlying investment? So ironically, if everything is going too well for a company, when would you be able to actually scoop up shares at a discounted price? Everything would be priced for perfection then, because there is so many positive sentiments surrounding the company. So rather than harboring angst and even hatred towards such publication, you should instead be thanking them for helping you spread more fear, more uncertainty, and more doubt, essentially trying to bring down the entire consumer and investment sentiments. Just a word of caution too, I think especially when the market is experiencing such turbulence and uncertainty, don't just dispel everything as FUD, F-U-D, FUD this, FUD that. I know this is a common F word in investing, but you should probably take the time to sit down with the article or to sit down with the video or whatever media publications you have, digest the merits of the discussion, and make sure you have your own independent judgment before you check in with the people you follow or even in the comment section down below. If you always just read the headline or just jump head into the discussion without formulating your own thought process independent of other people's thinking, that's when it can start becoming dangerous, especially if you're in an echo chamber. Worse still, you might not even realize that you are in an echo chamber. So with that, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!